Greetings, ladies and gentlemen. Welcome back to a very special episode of the True Podcast. It's truly for the culture, the unfiltered, uncensored, and unapologetically Black podcast show. Speak to the mic. I am your illustrious host, Marlon Joseph. And here on this show, we like to talk about and do three things, right? We like to provide helpful content and information to the Black community. We like to discuss and talk to Black men and women of all professions, all industries, and all organizations about their work that they're doing, as well as give acknowledgement to those Black men and women who are using their professions, their platforms, and their positions of power to help move the culture forward in a more positive light. Having said that, make sure you guys like, share, and subscribe to my YouTube channel. Make sure you can also check me out on Spotify and all other podcast platforms such as Google Podcasts, Apple Podcasts, and every other podcast outlet that you can find this show on. Here to commemorate the month of April being the Financial Literacy Month is a very dear friend of mine who is a return guest on this show. You may have seen him previously on one of the episodes that I had talking about the relevancy of our Black Greek letter organizations, more specifically the Black fraternities, and what more works and services that we can provide to our Black communities. A very good friend of mine, Johnny Johnson, who is a licensed financial coach, licensed financial professional. He is also a college endowment funding specialist and even a financial fitness director for the company FanFit Life. Johnny, I appreciate you, man, for taking the time to talk to me about this very, very important issue as it pertains to how we're able to start, sustain, and pass down generational wealth to our kids, our grandkids, great-grandkids, things of that nature, because financial literacy is a very important component and key piece to helping us get out of impoverished environments and impoverished neighborhoods that we, unfortunately, most of us come from. And so to take the time to speak with me about this and basically, provide such information that's very vital to our Black community, I appreciate you for, lending the time to do just that. Great to have you on the show again.
And appreciate it, brother. It's always a pleasure. When you're around certain people, they carry certain energy. It's just infectious. And I remember, kind of sidebars, us growing up and, in the college world and, going to parties and, just experiencing life in general the way we saw fit. I mean, you was always like a breath of fresh air to be around, definitely the life of the party in every sense of the word. And, I'm just glad to be here and share some learned information that I've been privy to come across with you and everybody that's going to view. So absolutely.
Yeah, man, I really appreciate that. And definitely, to that point, I will say this before I even get to my first question. Because one of the first things that the most common question I always ask first is in regards to how an individual got started with the idea of being in that position or being in that sector or in that industry, right? So for you, what sparked your interest into going into the financial industry in general?
Yeah, that's a very, very great question. I oftentimes have conversations with my clients about this. Maybe not the way that you're like asking the question and me just verbally giving it to you, but just in conversational mode. So to answer your question, I actually got in the financial industry by default. And what I mean by default, I took the traditional route after high school. I went to college, shout out Shaw University, Raleigh, North Carolina, one of the oldest HBCUs in the South. And when I went to college, my whole goal was to become a professional baseball player and hopefully play outfield for the Chicago White Sox, which is my favorite team.
Yes, sir.
But, when I got to college, me and the coach didn't really pan it out. I definitely didn't even play baseball in my college years. And I actually changed my major 3 times within my first, year in college. And so, that has everything to do with a lot of the stuff that we're going to be talking about this afternoon, which is having a plan, right? Yeah. And, we were talking offline, planning is only everything. Yeah. So you've heard the term, those that fail to plan to fail. Well, me being in this industry, has everything to do with somebody that I love and care about who's no longer physically here that didn't have a plan. My dad.
Yeah.
So after college, came back here to Chicago, started working because, Sally Mae at that time, now Navient, they want their student loan money back. So we do what we do to take care of our responsibilities. Absolutely. So while working my last 9-to-5 job, which was at Cricket, the cell phone company, when they came to Chicago in February of 2009, in December of 2010, December 30th to be exact, 2010, my dad passed away unexpectedly. I got a phone call from my cousin. He was working at 7-Up at the time. He called me. I was working at a location here in Chicago on Cermak and Cicero. And he called me, said, man, they found your old man unconscious. They took him to the hospital, Jackson Park to be exact. If you're from Chicago and know where that is,
yeah.
As you're viewing, you kind of know what I'm talking about. And when I got there, my Uncle Roy was crying, and he's really a non-emotional person, but he was crying for a reason. And then when the doctor shared the news with me, I instantly started crying because, that sense of, man, you can't make a phone call and talk to your dad or, go have a beer with him or whatever, right? So that's no longer in existence. So now, just like any person that passes away, the follow-up question is, what are you going to do with the body?
Yep.
Hence, does that person have life insurance? Can they go to a funeral home? Or are they going to be cremated? Or are they, body going to be donated to science somewhere in there? So that left me kind of upside down because even though I love my father's life, because I was a grown man, I had a son at the time, I was very young, I didn't see my dad as much as I would have liked to.
Yeah.
So before I got the news that day on December 30th, 2010, I probably hadn't seen my dad in close to a year. Kind of typical when you kind of out in the world and doing your thing, you may not see your family as much as you would like to. And I would urge, if that's somebody that's watching, that's where you are, don't hesitate to pick up the phone. Don't hesitate to get in your car and drive over to their house because you never know if you may not talk to them again. So that's just, for me to use scenario. But him passing away, devastating, obviously, and him not having life insurance, even more devastating. Because not only did my dad pass away on December 30th, 2010, but between that time and I know you probably remember the blizzard of 2011 when cars were stranded on Lakeshore Drive here in Chicago, et cetera. 5 other people passed away that I knew directly or indirectly. Ironically, they also didn't have life insurance when they passed. So at that point in early 2011, I didn't even know anything about a GoFundMe page. I didn't find out what a GoFundMe page was until like 2013, 2014.
That's when it really started to get popular.
Right. In regards to using it as a means of basically professionally begging or asking someone for a donation because somebody that you know, love, care about recently just made their physical transition. So that's what sparked me to get into the industry. I've always been an avid reader. I've always, liked learning new information. I record if I'm in the middle of an appointment during the day, I make sure my DVR is recording like things like Jeopardy. Cause I like to learn, that's just me. And I'm an inquisitive person.
Yeah.
A lot of people don't know that about me, but at the end of the day, I am. And so when, the opportunity was shared for me to get into the financial industry, ironically, by one of my clients when I used to work for Cricket, I was already thinking about getting into it. Why? Because my dad had just recently passed away. So that was just letting me know that, man, I'm going forward in the right path. And so
one things that I oftentimes hear commonly from my guests when it comes to what sparked their interest and got them in the industry or profession they're in is that they saw a need for it. And it's unfortunate that most of us come from the background or the cloth in the Black community where most of our families aren't teaching or practicing anything financially when it comes to financial responsibility, not planning for the future. We're taught to survive. We're instantly in survival mode every single day. We're not thinking long term. We've been so caught up and wrapped up in think in short-term measures for things. Okay, how am I going to pay for this today? Or how am I going to get to this tomorrow? Versus what long-term effects that we need to be setting aside money for, and things that we need to obviously set aside money for a rainy day and things of that nature. But because we have so many immediate needs and immediate things that need our attention in real time, we oftentimes don't even have the bandwidth, the money, or even the resources to look that far ahead in the future, which is so unfortunate, and it pertains to how we're structured financially. I mean, I've had a friend of mine, a frat brother of mine on this show, to talk about the aspects of us going broke trying to look rich. You know what I mean? We oftentimes spending money on wasteless things and materialistic things, and they don't have anything to show for it thereafter. And it's like, instead of putting that money aside and making sure that we have life insurance, that we have health insurance, that we have a will and things of that nature, as I've gotten older and realized the importance of this, because we're not going to be here forever. And so, and seeing so many of the GoFundMes pop up, man, it's so daunting and unfortunate that people that they are so reliant on that as a means and source to get money to help pay for their loved ones, you know, funeral arrangements or cremation and things like that. It's like, damn, why would we not put money to the side or having a life insurance policy out to basically pay for all of this when that time comes? Because we're all going to meet that demise at some point in time in life. But it's about preparing not only ourselves for that, but preparing our families for that too, because we want to keep leaving here and leaving a bill behind. You know what I mean? And and that's one of the most common issues that we're having in the Black community when it comes to not fully thinking through our plan, not just today, not just tomorrow, but next week, next month, and next year, and years later. You know, so from that standpoint, man, I do share the sentiment that, you know, having family members who obviously who haven't been taught how important financial literacy really is. And so, you know, we're oftentimes, like I said, we're only in survival mode all day, every day. And then being in situations that we're in now as adults, looking back on that, the psychological damage that it did to us to have to struggle through those financial situations a lot of times in our younger years, it did a lot of damage to us. I can speak to it personally that I'm still going through the motions of breaking away from those generational curses that those things oftentimes plagued in my own life. And so I know that everyone else in the Black community, more specifically, have gone through that. And, you know, we have to teach the importance to our kids and to ourselves, just how much, you know, money saving, investing, and just being responsible spenders, and how important that is. And so, which brings me to my next question in regards to that. So, what are some of the basic financial principles that we all can basically be doing or just knowing about?
Yeah, well, I mean, once again, that's a very good question. And when you're talking about basics, it's literally like us learning another language, because money is a language, finance is a language, and you learn it over time. You don't learn it by just reading one book. You don't learn about just watching one YouTube video. You learn it ongoing. It's like watching a movie. You watch the movie as many times as you want to, and different things start to peek out. Oh, I didn't notice that in that movie that time. So when you're talking the basic principles of financial education, it's really about, obviously it's about making money. So you have to have a source of money that you're making. So whether you work a traditional 9-to-5 job, or, you know, you're self-employed, meaning you drive Uber or Lyft, or you're a barber or a beautician, or you own a landscaping company, or whatever the case may be, or if you're in corporate America, you make high six figures, et cetera. At the end of the day, when that money comes into your bank account, what do you know to do with it? So here's some things that you can do with it. We're talking basic principles. Number one, pay yourself first. That's the first rule of financial business, self-preservation, right? What does that mean? Well, if you bring home, hypothetically, $5,000 a month from your place of employment, whether it's your business or whether you work a job, the goal minimally is should be saving and investing at least 10% of that. So if you bring home $5,000 a month after your taxes, if you will, minimally, and the key word is minimally, you should be setting aside $500 first before you pay your light bill, before you pay your gas bill, before you pay anything to anybody. You take care of the person that worked them 40 hours, 2 weeks straight to get that money.
Absolutely.
Right? So number one, pay yourself first. Rule of thumb, put 10% of your monthly income up that you make, and you want to put it in a vehicle that can grow, right? Yeah. And that obviously wouldn't include the bank, because banks are not places for us to really grow our money. It's really just a housing spot. Yeah. And they make money off of the money that we put into their institution called the bank. Yeah. So that's number one, pay yourself first. Number two is get you a financial coach, a financial specialist. I've been doing what I've been doing for 9 years. I'm not nowhere where I'm going to be, but I'm far from where I came from, right? And I'm getting better every day because I'm mastering my craft on a day in and day out basis. But you want to get you a financial coach. I have a couple of financial coaches that help me. Obviously, they make way more money than I do, but I'm aspiring to get to that level at some point in my career and in my lifetime. And so you always want to make sure that you have somebody around you that can put you on game, if you will, right? So second thing, you want to have a financial coach, because what is that coach going to do? Michael Jordan does not win 6 championships without Phil Jackson. Obviously, he needed the team, but I'm just talking coaching right now.
Absolutely.
If he had another coach, they might have had the same players. They may even have had the same scheme, but it takes a certain coach to bring the best out of his players or her players, depending on if the coach is a man or a woman.
Absolutely.
Right? So you need to have a financial coach, somebody that's a specialist, somebody that shares a commonality with you and some of your ideologies of life. So if you like cut across the board, no nonsense, maybe you get somebody that does business that way, right? Like with me, I'm a very balanced man. I'm never on one end or the other in regards to emotions or energy. Like I try to stay centered because my balanced emotional and personality state can help somebody that may be on one end or the other. And I come across them on a day in and day out basis. So, but at the end of the day, I'm a financial coach. I'm a financial specialist. I'm a licensed professional, and I have the credentials. I've done what I needed to do by my state, meaning the state that I live in, and other states as well. So regardless whether you're in Chicago, Illinois, with obviously Chicago is a city, but if you're in the state of Illinois or any other state, the goal for me is to assess you. So I'm kind of like a financial therapist almost, even though that's still a coach at the end of the day.
Absolutely.
I give you advice based on the information that you provide. So instead of sitting in a chair as a traditional therapist, you get on Zoom with me for an hour and I ask you some questions. And based on the answers to your questions is allowing me and helping me to assess you on how I can best guide you from a financial overview, if you will, or overall customized strategy financially. So second thing, have a financial coach. And then third, which is the most interesting part, you got to take action, right? Like the firm that I work with, FinFit Life, brand new firm, startup, only a little bit over 2 years old, but we're doing some amazing things. And there's some great things coming down the pipeline. So when you start to see the FinFit Life hashtags and FinFit Life movements, you'll know what that looks like in the very near future. But this morning, we had something that we call the FinFit Life Fit Talk. So every other month, we have understanding and information that we share about nutrition, health and wellness, having a mental stability, the whole 9 yards. So we had one this morning. And they gave us an amazing scenario. It's called the 7-minute workout. So you literally do like maybe about 10 or 11, maybe even 12 different workouts for 30 to 45 seconds at a time. And you get a 5 to 10 second break in between.
Yeah.
So when I did that this morning, got some movement in my Fitbit, the whole 9 yards, but I did what? They could have put it on the screen. I was like, well, that look appealing. But if I don't take any action, meaning actually do what they're instructing us to do to help us move our bodies to become overall healthy, if you will, then I don't get the results that I got. But now the question is, once you take action, now you got to do it consistently, right? So if I ask a client, one of the questions I may ask is, do you have any health goals? Well, if they say, man, I want to lose 20 pounds. Okay, that's a health goal. But now the question goes back to what we initially talked about, planning. What's your plan to get you to lose this 20 pounds? You can't just say, man, I'm going to lose 20 pounds and then it just happened. You have to have a step-by-step plan. Do you drink more water? Do you get more rest? Do you eat more fruits and vegetables and clean meats like chicken and fish that may be baked or fried or grilled as opposed to, baked or grilled as opposed to fried?
Yep.
Right? Those things are all about taking action and being consistent, right? So that's what it looks like at the end of the day. Basic principles. Pay yourself first. Get you a financial coach or a mentor or somebody in the financial world that's licensed and that's trained and that's a professional that can guide you through the terrain of this financial world, if you will, because things are always changing. And then third, but not least, is to take action and stay consistent with the action that you're taking. Yeah, those are just the basics.
And you know what? It's funny you say that because, obviously the past, for a good little while, my wife and I, we have a financial advisor that we speak with. And, he basically helped us establish our Roth, our IRAs accounts. He helped us, basically start our life insurance policies outside of our work, because most of the time people who are obviously working for a company, they initially enroll into the life insurance that the company that they're employed by are basically establishing for them. And so you definitely still want to have a life insurance outside of your work. So in the event you ever lose your job or you move or you basically transition to another job, you're still able to sustain that life insurance policy outside of work. And so that was one of the things we oftentimes talked about too. And then the one thing that I know for a fact that we as Black people in the Black community don't like to talk about is talking about establishing a will, because that will, even saying the word will and testament, it's like it's a scary thing, right? Because we know we're going to meet that demise. And it's like, okay, who do I leave these things to? And so for me personally, I will say that even once I found out my wife and I were expecting my daughter, I started putting money aside for her before she was born. Same thing that goes for my son. The one thing that I know for me personally that I went through so many times throughout my life going without, to where I pushed myself harder and harder every single day to make sure my kids never know what that feeling looks like, what that feels like for them to have to be in a situation where, as a teenager, I'm having to help around with paying bills and things like that, as well as still trying to maintain my innocence as a child in that moment. So being forced to have to be an adult and a child at the same time is a very difficult thing. And most of our kids too often are being put in those situations, mainly mostly from a financial perspective. And so a lot of times if we're not really conscientious about what we're putting our kids through, then they'll ultimately go through the same things we went through as kids too. And so it's like we have to make conscious decisions to make sure that our kids are not being put in situations to have to help us with bills. We're adults. We're grown, capable, able-bodied adults who can take care of the house, who should have been taking care of the house prior to the child even being born. And so from that perspective, I know that putting money away from my kids to where once they turn 18 or turn 21 for that matter, they're already come into the adult life with no debt, having a car paid off in full already, or just buying a brand new car without a car note. The only responsibility they'll have is to take some of their money and pay their insurance with, and then obviously help establish themselves in terms of buying them a house or getting an apartment and things like that. Those things will already be set for them, as well as money aside for college. But with my wife being a professor at a university, the one thing we always said was that since they can go to school free there, they can go to school free there. Now, if you want to go to school somewhere else and you get a full ride, then we all for it. You know what I mean? And so, but basically making sure that we're establishing things early on in their lives so that when they get teenage or to 21 or whatever, we're not trying to catch up. We already got things established. And so those type of things, proper planning prevents piss poor performance. And those, we have to be much more conscientious about that in the Black community. So, and that's one of the things, well, there's a few things that my financial advisor talked to my wife and I about, with planning ahead rather than looking at now. So,
yeah,
I mean, I do appreciate you for speaking on that in terms of the basic practice about financial literacy and how we're able to take care of our money once we do get paid. Because a lot of times we see that check and we think, oh, I can go ahead and hit the club, or I can go ahead and go buy an outfit or something. If that's your first mind, then you already lost the financial battle. You already defeated by thinking materialistically about what can be bought, being consumed with being a consumer. And that's very problematic in the Black community. So we have to break free from that habit. Which leads me to my next question.
Instant gratification is the two words that come to mind. Like that's really what it is. Like, I haven't had this happen to me directly, but I had a colleague of mine that had a death claim that he made. Well, the client made the death claim, but he was the agent. And he took the child, who happened to be 22, a $150,000 tax-free check, because they were the beneficiary of the parents passing away. And when he gave the check and he kind of educated them about, what that looks like, et cetera, the first thing that came out that person's mouth, the young 22-year-old, is about what they were going to buy. Like, you just got a bag, right? And we all pretty much come from the same cloth, maybe different walks of life, but for the most part, same scenario. When you get a bag of money, hence 150,000, or even if it was 50,000, or even if it was $1 million, you have to be in the mindset of, I never want to lose this feeling. So that means what? How can I? So you play defense first when you come across stuff like that. What do I mean by defense first? You want to protect what you got already. So if you got $150,000, you need to figure out, how can I sustain this $150,000 basically forever? So you need to do what? You need to pay yourself first. You just got 150 grand. Hypothetically, somebody passed away. You were the beneficiary. You make the claim. You do everything you need to do. You cross all the T's, dot all the I's. Boom. Now you got $150,000 in your account. Don't go and buy the minks and the extra chains and the Jordans that you always wanted to get, but you couldn't get it because you couldn't stand in the line long enough. You understand?
BMW or the Audi.
I mean, cash though. You
all the flashiness. You got all that, but after that last purchase, what do you have to show for it? Because that car you just bought just depreciated as soon as you drove it off the lot, so it ain't worth nearly as much as what you paid for it. One, and two, all the mics and all the chains and the watches and all that good stuff. It looks good, but what is it going to equal out to in the long haul? And those type of things there. And it's funny you say that, because I oftentimes think about how when I see athletes, entertainers, they talk about the $1 million check that they got. And I always tell people this: if I ever get a chance to get $1 million check, I ain't gonna never not have $1 million ever again.
Come on with it. And that's the mentality you gotta have.
And I don't care what I gotta do. I know that $1 million that I just got, I'm never not gonna have it any damn more, ever again.
That's the mentality. The mentality we gotta have. A lot of us have so there's three types of people. You have proactive people, you have reactive people, and you have non-active people. So we got to strive to be, and I'm not saying anybody that's watching this, if you're proactive, this is not for you. But we should all strive to be proactive, meaning what? We know certain things are going to happen, certain things are going to come up. So we have to do something before it happens, right? Reactive people.
And real quick, I want to put that disclaimer out there. I'm glad you said it, because in this show, we're here to talk about things that we've learned over time, right? None of us came from money. None of us learned this right off the bat, right? It came from circumstances that we had to learn from, mistakes that we made. And so And I know for me personally, I don't have all the answers, and I always say that, but I'm always willing to listen and learn to those who are in these professions and industries who can speak to the very things that we need to all be practicing and applying to our own lives, as well as, dispersing that information out to everybody else who needs to hear it. So for me, this is not about, pointing out anybody's imperfections, but it's more about how we can do better than what we've been doing all this time. And so it's about accountability, man. And we have to be able to look at ourselves in the mirror and say, I know it's more about you that you can bring out of you. I know it's something more to you than what state you're in right now. And I mean, in the mental state, the physical state, the financial state in this particular juncture. So we have to be able to be honest with ourselves and be honest with the very loved ones that surround us on an everyday basis, because again, we're missing out on so many opportunities and money that we can be embarking on, and not just for us, but for other generations, thereafter us too. Because the one thing that I always hear, and I'm always, talking to my wife and my kids about, is that we want to establish and basically sustain generational wealth for a generation of children in this family that we're never going to be alive to see. That's the end goal. That is the ultimate goal. It ain't just about us and now, it's about them and later.
That's the proactiveness.
Absolutely.
So you got proactive, you got reactive. They wait for something to happen and then they start moving. And then you got non-active people. It's like they just watching a movie. Like, oh, okay, yeah. And they're not interested in none of that. That's the person that live day to day or check to check, if you will. And no disrespect if you live that way. But the goal of this platform, and specifically this conversation, is like Brother Joseph just said, get you from where you are and get you to another level, because everything that we want to have happen in our life is already inside of us internally. But we have to match our internal world with our mindset and mentality, and thus it manifests on the external side of us or outside of us. So if we want a brand new car, you probably have heard the term, what you focus on is what grows. If you want a brand new car and you're focused on that, you got your vision board up, etc. Now you got to obviously create the income to be able to go out and purchase the car. So now when you get the car, let's just say it take you 6 months to do it. I'm just hypothetical. Well, that was 6 months of focus because you targeted something that you wanted and you did not lose track or focus of that until it was what they call sure to happen. So in the financial world, it's the same thing. If you say, I want to have $500,000 of tax-free money by the time I retire, and that retirement age is 65, well, first of all, you got to ask yourself, well, how old am I now? When you're looking at yourself in the mirror, how old am I now? Whatever that age is, now you know what your deadline is. Because if you never put a deadline on anything for yourself, it's never going to happen, because something is always going to get in the way of it. Some life event with your family or your job or your bank account or dog ate my homework, whatever. That's just what it is at the end of the day. So you have to put a deadline on things, right?
Yep.
And most people, once again, it has a lot to do with a plan. A plan has a deadline on it, right? You mentioned wills. You mentioned wills a few minutes ago. A will is something that really is not even talked about in the African American and Black communities, brown communities, unless that person owned, businesses or laundromats. And we hope that they do, so that they can leave it to their family. But when you look at the numbers, probably about 82% of people that look like me and you on this podcast right now, we don't get left anything. So going back to my original point, when you do get left something, hence the $150,000 that the young 22-year-old got, you can value and cherish it more. But guess what? You may not even be able to do that, even if you do what you're supposed to do to get it, because we're all creatures of habit. So the only things that we know and care about now are things that we were exposed to probably in our earlier life. So I'm gonna just use a woman, for example, and this is no disrespect. A woman knows how to cook now in whatever older age that she is, because her mom or a grandma, big mama, if you will, or her favorite auntie taught her how to cook when she was 9 or 10 or just getting into high school. So now let's rewind the tape. is the financial scenario the same way? Were we taught about money? Were we taught about how to balance a checkbook? Were we taught about the importance of life insurance? Were we taught about estate planning? Were we taught about college planning and endowment funds and those types of things? Were we taught about having a financial professional that you talk to once a month just to bounce ideas off of, whether it be going into business or purchasing property or investing more money or giving back to your local charity or church or zakat, depending on, you know, your religious beliefs, if you will.
Yeah.
We have to change our habits because we are our habits. Absolutely. That's just what it is.
Yeah, and you know what? And to that point, Johnny, and you bring up a very interesting point about how if we're not obviously planning ahead, then we're looking at the now and just trying to just make it by, right? And so for me, because I definitely want to know, you know, what are you telling your clients, you know, in these situations where their basic knowledge of financial literacy is bare minimum, or just save, or just have a savings account, right? Most of us who even know just that much, we'll say, oh, well, if you have a savings account, you put money in a savings account, then that money will move. But if you think about it, you're only getting but a 0.005% on your savings, right? So you may get $500 in like 30 years if you think about it. That's not a lot of money at all. So that money was there, it was being sustained, and something was growing out of it, but it wasn't a lot. And so if you think about investments, I've had, like I said, my one of my frat brothers who's in the trade option in the stocks investments industry. He talked more specifically about how we can trade options and how we can buy more shares in different stocks, pay attention to the stock market, and learn more about how to get into this financial sector when it comes to sustaining or just establishing our generational wealth in a multitude of ways. There are more ways to do things than just the normal way that we know. The problem is, a lot of us, like you said, come from backgrounds where we're not being taught how to establish our credit. We're not being taught how to balance a checkbook. We're not being taught how to spend, you know, relatively a lot wiser. You know what I mean? Yeah. So we ain't thinking about retail, the retail prices of things versus when that very thing you still want is on sale maybe 2-3 weeks from now, which is going to knock the price completely almost half down versus what you would have originally paid for it. So it's like waiting things out, playing the numbers game, and saying, you know what, I don't need this right now. And you know, for the last few years, me personally, I have been able to say to myself that, you know, if I go to the store and see something I want, I see the price and I don't like it, I'm like, you know what, I don't need that right now. I can wait, or I don't need it at all. You know what I mean? And so
that's a good mentality to have.
And listen, it took time and that type of thing. You know, I have to be real about that. And I'm gonna be honest, being very transparent here. Those type of things is gonna take time because we're breaking ourselves from these habits of just spending, knowing damn well that this ain't gonna pan out on any damn thing after this. We're gonna feel like shit after we buy it, and then we especially if it's something like an outfit, we wear it. And then now we ain't even wearing it no more, or we're wearing it. We're gonna wear the shit out of it because we didn't pay so much money for it. You know what I mean? So, and it's like these type of things, materialistic things, really plague our mind too much in the Black community to where we try to one up somebody else. We're trying to keep up with the Joneses entirely too damn much, and trying to basically show off in front of people who don't give a damn about what we have in the first place. When the real money game is how long you can sustain the amount of money that you're making, because it ain't just about the money you're making, it's about the money you're saving and you're investing in as well. You're investing into your future, to your kids' future. That's the ultimate goal that we have to get to, and which leads me to my next question about this. I mean, what do you think, or in your professional experience, what would you say would be the reason why we don't talk enough about life insurance and estate planning and things like that in the Black community?
Well, a couple of reasons. Number one, we're only, once again, creatures of habit. And so if we haven't been exposed to something, we don't know to ask that. We don't know to talk about wills and trust and life insurance. We don't come from that. Because why? It's a taboo subject for our community.
Yep.
Every other community, they talk about business first.
They do.
Jewish community, Asian community, African community, especially the African community, right? The Caribbean community, they about their money. They come from Jamaica and the Bahamas and St. Croix, and they come in and they do these festivals and they break a bag and then they take it back home and do what they need to do with it to survive.
Absolutely.
So it's really about making sure that we as people get exposed to the information. Hence, April is National Financial Literacy Month, right? But now, once you get exposed to something, you need to be in a position to be like, okay, well, what can I do with, like getting a piece of clay? Well, you can make anything out of clay that you want. You make a vase, you can make a bowl, whatever. But you got to have that clay. So the information is the clay. So once you got it in your hand,
you apply it though,
yeah,
that's the end goal. My uncle used to tell me that. He said, "Knowledge is not power; applied knowledge is." So if you know something and you don't apply it, how the hell can you say you know it?
And that goes back to the action. I've talked to countless people, and I mentioned them a vehicle called an IUL, right? So IUL stands for Index Universal Life Insurance. An amazing vehicle. It's been around since primarily the Reagan era, but the concept of the vehicle has been around since the Great Depression in the early 1900s. But at the end of the day, it's really about what have we been taught about it? Mm-hmm. Because a vehicle like an IUL can turn you and I into our own bank. I literally did a Facebook Live video about that yesterday. So every Friday I do Financial Education Friday with Johnny Cash, which is me, kind of like my alias, if you will. And yesterday I talked about, obviously, the first day of the month, or April being National Financial Literacy Month, as well as I talked to them about becoming their own bank. So when you talk financial education, financial literacy, and then you start talking the language of, hey, if I can show you how to become your own bank, would you be open to having that conversation with me? So the average person is like, yeah, because they hear the word bank equals money in most people's minds.
Yep.
But now when the questions start being asked and the information starts to be shared by myself to other people that I talk to, now their eyes get big, they lean in a little bit. You know, body language is everything when it comes to communicating with people, whether you're doing it through Zoom like we are right now, or if we were doing it face to face. That means what? They're interested in getting the information. But like you just mentioned, once you get the information, now do you take action on it? Right? One of my fraternity brothers, Alpha Phi Alpha Fraternity Incorporated, you know, I got to represent. But one of my frat brothers became my client just by seeing one of my Facebook Live videos about the IUL, right?
Yeah.
And because the IUL provides tax advantage situations, meaning when you get ready to use the money, i.e. to supplement you in retirement, you don't have to worry about paying any taxes. So it reduces your tax liability for that particular vehicle. So when he saw that, he reached out to me, like basically through a message request, because at that point we weren't Facebook friends. I didn't even know who he was. Obviously, I learned about him through our communication, but I didn't know who he was at the time. He was in Tennessee. I'm in Chicago, but our connection through a platform called Facebook, if you will, got me to help him to understand the information that I had readily available for him, but he grasped the opportunity as far as the information, and he took direct action on it because it made sense to him. Yeah. So that leads me to say this. We tell our kids everything to do, right? Whether our kids are younger, they're a little bit older, the goal is for the kid to listen to the parent because the parent knows what's best. And we did that from our parents. But guess what? When somebody else tells us information the same way that we tell it to our children, what are our children's reactions? Our children are going to react the same way that we react to information. Absolutely. Most people don't even know that because it's kind of like out of sight, out of mind. But when you really think about it, if you're telling your children things over and over and over again before they finally get it, when you have conversations with me about like financial education or a product or something that you said you wanted to do it, now it's a matter of how fast is it going to take you to do it? Or are you like your son or your daughter? Because once again, they follow suit. It's all about energy. we don't do what we hear. We do what we see.
Yeah.
So if mom and dad, let's use you for example. And I know you got a young son, and congratulations again on that. When our kids are younger, they're going to emulate whoever they're around the most.
Absolutely.
So when you're talking finances, well, who are you surrounding yourself around? What kind of conversations are you having with people that you're surrounding yourself around? What kind of events are you attending where you're surrounding yourself around people with the same type of mentality? That's what it's all about. And that creates the energy, that creates the, hey, I got to do this like right now.
Yeah.
Because somebody else around you is trying to put you on game, so to speak. So if you want to be wealthy, you don't hang around people who have less money than you. You hang around more people who have more money than you, because now you get a chance to pick their brain. I'll use Ayo Dosunmu, right? Guard for the Bulls, just got drafted this year, right? Having a phenomenal rookie year, considering what's going on with COVID, et cetera. But one of the times they were interviewing somebody and they said this about him: Ayo was a sponge. And the person was like, what do you mean by a sponge? Well, every few minutes he's asking questions about how to get better as a basketball player, primarily to DeMar DeRozan, who just dropped 50 points a couple nights ago.
Yes, sir.
Against who did they play?
We played the Clippers. It was overtime. Yep.
Right, 135 to 130, exactly.
Yes, sir. Shot town, baby.
But why am I saying that? Well, he's inquisitive. He wants to know more about what it is he's trying to do. So why am I saying that? Well, from a financial standpoint, we should be one that talk with our financial coach, or, you know, some people like yourself, you got an advisor, et cetera. And just disclaimer purposes, I'm not a financial advisor, never claim to be, because a financial advisor, it takes certain credentials, certain certifications to even be able to call yourself a financial advisor. Yeah. Same thing with a financial plan. I just wanted to throw that in there, because a lot of people may address me and they be like, well, hey, Mr. Johnson, or hey, Johnny, and whatnot, how long you been a financial advisor? I've never been a financial advisor.
Yeah.
I'm a licensed financial professional. Absolutely. And a financial coach, because I help my clients and coach them and educate them on how to get from where they are to where they want to be, you know, in a reasonable amount of time.
So quick interjection. So, because you brought up an interesting point about that, and just basically distinguishing those titles, right? So let's just say, you know, this quick scenario. I'm a young single guy who doesn't who basically get paid roughly 55 to 65, maybe like $55,000 to $65,000 a year. I don't have any kids, but you know, obviously, you know, I save money, but I do spend occasionally a bit excessively, if you will. Okay. What are your, you know, the basic things that you would tell someone in terms of coaching them financially when it comes to, like, okay, I have access to this amount of money. What should I be doing with this on a day-to-day, month-to-month, you know, yearly basis? And even still, to even go even further than that, what are some of the monetary benefits from the government that we get through these supplemental, you know, life insurance policies and things like that too? How does someone basically start off with just the basic thing, the basic fundamentals of financial literacy?
Yeah, well, once again, that's another great question. So going to the gentleman that you just described, the young guy, he make 55, 65,000 a year. If he was my coach, let's say he was 27, right? Just coming into his own, graduated from college, got a couple degrees, just starting his entry-level scenario, making, you know, nice money for his age and his scenario. Right. So when he has a conversation with me via Zoom, or even if we just talked over the phone, it's going to be my goal initially to figure out what he wants to do, right? Because once again, I said it a few minutes ago, in the financial world, you play defense first, right? So what does that mean when I say play defense? Well, you want to protect what you get, what you own, what you receive, meaning as far as income, and last but certainly not least, your family, right? Yeah. So that has a lot to do with an emergency fund, right? Defense. If something happens and it causes an emergency, how can you solve that emergency? We have to have a plan for that, right? You have to have a plan in regards to If you died unexpectedly, who's going to suffer the most financially? You put a plan in place that's called life insurance. So if you die unexpectedly, you can leave them financially stable, where there's no GoFundMe pages or passing the hats around or church dinners, etc. Right?
Yeah, we have to break it. We have to break free from that, man, because
Yeah.
GoFundMe account is not a life insurance policy. That's
And
not a
they
life
take
insurance
10% off the top.
They
So
do.
if you're
So,
trying to raise
but,
10
but, yeah,
grand, you're
exactly.
trying to raise 10 grand in a matter of a week and a half, 2 weeks, so you can properly, bury your, loved one that just passed away, and you raise 10 grand on GoFundMe,
Yeah,
they taking away 1,000 because they take their 10%. So
that's
that means
it.
you only got 9,000.
Exactly. And funerals costs, and the cost of funerals are going up each and every year. So it's like,
Inflation.
yeah, the inflation has really affected and impacted so many industries and entities of our just everyday living, right? So we have to keep that in mind too. But it's like, to your point about establishing ourselves early on, to where we're not relying on donations from the church or donations from GoFundMe. We actually are establishing ourselves to make sure if something happens to us, whether we have kids or not, our next of kin, our parents, or even if we do have kids, our kids will be the beneficiaries of that money, and then they'll be able to take some of that money to properly bury us or cremate us. Obviously, everyone is going more towards the cremation piece because that's a lot less expensive.
True.
But even still, though, the planning and the preparations of someone departing from this life, right? Those type of things have such a toll on us, not just from an emotional standpoint, but from a financial standpoint as well. It's the assets, it's the things that particular person has left behind. How do you disperse this among people that he or she loved, or he or she were close to, right? These type of things have to be notated and documented inside of a will, inside of a life insurance policy, if you will. Some of these things can obviously be given to people who are obviously signed on as the beneficiaries to these specific things that they're leaving behind. So we have to be much more cognizant of that.
Yeah, absolutely. And, kind of speaking more in depth on that part, as far as the defensive planning, which is what you want to do first when building your personal financial house, having a will and a trust is so vitally important. It doesn't matter if your estate is 50,000 or if it's 5 million. Everybody needs to have a will and a trust, because the will is kind of like, putting together an itemized list, right? I want my wife to have this. I want my son to have this. I want my daughter to have that. I want my mom to have that, right? I want my nephew to have that, whatever the case may be. But without that 401k that you got at your job, that's really fluctuating with with what's going on with Ukraine and Russia and the rising gas prices. If you died today, and obviously I'm not wishing this on anybody, but I'm just speaking in general, and you had $300,000 in your 401k, what happens to that $300,000 if you don't have a will and a trust? Well, I'll tell you what happens in a general sense. You may have had a beneficiary with your 401k scenario, right? Mm-hmm. But once that happens in the process of transitioning that fund, if you will, from you as the owner and the originator to your beneficiary, whether it be your spouse or your child that's older, if you will, they're not going to receive the $300,000. They're going to receive a portion of it because you got probate fees in there, you got taxes in there. And then don't let them turn around and once they receive whatever that money is, let's say they receive, I'm just throwing them 180,000. Where if they decide to start using that money, and I'm specifically talking about somebody with a 401k, now they're going to be taxed at their tax bracket because they're under the age of 59 and a half, because that's the way that vehicle is designed to be used. Yeah. So now let's rewind the tape. Same $300,000, same 401k, but now you got it in the will. Hey, my daughter's going to get this 300, well, not 300,000. My daughter's going to get my full 401k benefit, but it's also in the trust, right? So that now that transition happens, you lose your life unexpectedly. Now they don't have to worry about losing the 300,000 because it was done the right way with a plan, with a financial professional that guided you through the process, held your hand, answered your questions, had all of the professionalism in the world, and last but certainly not least, you took action on the information that you received. You didn't file it away. You didn't, oh, okay, that's great. And then go and do something ignorant, like go buy a bag when you got 20 of them in your closet already.
Yep.
Or go and buy another pair of the same shoes that you got 4 pair of already, hypothetically. And we know that happens in our community.
Do it too often. Absolutely. Yeah. And so, well, I want to end the show by asking this question in regards to that, because you kind of touched on it a little bit. What are some good ways that we as adults can reduce our taxes? That way we pay the government, we pay the government less in our retirement, right? So you spoke a little bit about how we can get, there are certain tax breaks within your retirement that you obviously can receive where you're not paying as much. Now, one thing my financial advisor talked to me about was that you can have it set up to where you're paying majority of your taxes on the front end and reaping the benefits of it on the back end later on in life, or you can have it to where you're paying more of it or less of it now and then more of it later. You would rather pay more of it now than pay more of it later, because once you retire, you're up there in age, you're not working anymore, and it's like, why should I have to be paying more taxes in your older age than you did when you were younger, healthier, ambitious, and obviously have much more time and energy for yourself to keep making even more money with the advancement of your career and things like that? Why is it that or what are the ways that we can obviously go about preventing having to pay Uncle Sam more money later on when we do retire?
Yeah, well, at the end of that, I put it to you like this: you could pay taxes on the seeds, or you could pay taxes on the harvest, right?
Great way.
So let's say the taxes on the seeds is $15,000, but the taxes on the harvest is $150,000. Which tax bill you want? Because whichever one you want, that's the one you're gonna get, right? Yeah. So that leads me into saying what? I'm answering your question. Ways that you can position yourself to be taxed, what we call tax advantage, right? Or tax-free in a nutshell. Okay. Number one, you got to know the tax lanes or the tax buckets, right? You got your tax now bucket, right? That's right away, right? That's us, or should I say, that's people who work a job. You work 40 hours a week, 80 hours every 2 weeks, if you will, but your gross number is one number. So let's say your gross number was $2,300 for your 2 weeks. Your net number may be around $1,400. Well, a portion of that money that's not on that check is federal and state taxes.
Yeah.
So that's tax now, and that's also in bank products. So you open a savings account or a money market or a certificate of deposit, also referred to as a CD. That's money being taxed right now. Boom. So that's the first bucket. Second bucket is the tax later bucket. That's your 401k at your job, or your 403b, or your deferred comp, also referred to as a 457, right? These are what you call qualified plans. Thrift savings plan. If you're a postal worker, you know what a TSP is. It's a tax later vehicle, meaning what? It's also called tax defer. You probably have heard that term before.
Yeah,
meaning that's literally paying taxes on the harvest as opposed to the seeds, right? So that means what? When you're in your accumulation phase, meaning your working years, and your money is growing in this vehicle called a qualified plan, when you get ready to retire, let's say you got, $700,000 in your retirement. Well, because you didn't pay any taxes when you were accumulating, now Uncle Sam is going to come and take a portion of your money. So now it depends on what tax bracket you're in at that time. So let's say you're in a 40% tax bracket. Easy math, you got 700,000, 40% tax bracket, 7 times 4 is 28. You just gave away $280,000 in taxes. That's what that looked like. So now you subtract 280 from 700,000. The remainder is what you have to live off of.
Yep.
But now the question is,
unless you're going back to work, unless you're still working, right? So
exactly.
Yeah.
So that was just going where I was going. How long is it going to take you to use this money, and now you back working where you probably don't want to work, talking to people that you probably don't want to talk to? So that's the second bucket, tax later or tax deferred. The tax advantage bucket is the most crucial bucket, but it's oftentimes overlooked because it could be a boring topic depending on who's receiving the information, right? Okay. So things like life insurance and other investments, the average person don't want to talk about that because it's boring. But if it's bringing you money where it's keeping money away from being lost, but growing your money and preventing you from paying taxes, that's a conversation you should want to have. That's information you should want to receive. So from a vehicle standpoint, that's in a Roth IRA. I heard you mention you have one, so it's great that you got one. Yeah. The only caveat with the Roth IRA is there's a limit to the amount of money you can put in on an annual basis, depending on your household income. Yeah. Right. So, but then you also got the permanent life insurance policy, in modern times, obviously the IUL, Indexed Universal Life Insurance. But the only caveat to the IUL, and it's not a bad thing, but because it is a permanent life insurance at its foundation, you have to qualify for it based on your age, your health, and all of the risk factors, meaning driving history, criminal history.
Oh yeah, they question you about everything. We actually did have to have our nurse come in and give us a physical and everything.
Paramedical exam,
ask us about tobacco usage, ask us about alcohol intake and things like that. So it's very thorough because they want to know, because again, this is still an investment when you think about it, right? So they want to know that they're not, investing in someone who has pre-existing medical conditions who are obviously going to cost them more money than they're going to actually, be paying out. And so, from that standpoint, I definitely understood that to a T when it was breaking that down to us. And lucky enough, I'm in good shape. My wife is in good shape, and we're healthy. So our life expectancy obviously would be much longer than the average, right? And it's unfortunate that in the Black community, we don't see many of us living past the age of 60 to 65. And so a lot of that's due to health complications that we have. And so these insurance companies are in the business of making money too, just as well as making sure that you're reserved and taken care of also. But it's a two-way street. We have to be able to do our parts and making sure that we're living longer and healthier lives from a physical standpoint, as well as from a financial standpoint too, because again, we will ultimately see a return on that investment for ourselves, but most importantly for our kids and future generations too, however way we have that established. So
absolutely. And even speaking on that, moreover, it's about playing a long game, right? I mentioned the word instant gratification before. Well, it's good to be instantly gratified on certain occasions, but when you're talking about things like retirement, or maybe buying a building in retirement or something to that effect, you got to play the long game. So the long game is about, hear this very carefully, what I'm about to say. This is a wealth move right here. Invest small amounts of money for a long period of time. You have a bag of money that you can be proud of, pay no taxes on, and be able to live off of for the rest of your life. But you have to do it at the age that you are now. So whatever age that you are when you're watching this podcast, whenever it's posted, take a certain amount of money, right? Once again, I always educate it's about 10% minimally, because you want to save that amount of money, because if you compound it over time, using the rule of 72, that's another one of the information that I show my clients about doubling your money. Well, if you got a certain amount of money that you're putting into a vehicle and you're getting a certain type of interest rate, let's say 6, 7, 8%, and you're getting that on average every year, meaning you don't get it every year, but if you look at it over 10, 15, 20-year period, you average that per year, that's going to benefit you in the next 20, 30 years when you get ready to retire, right? Yep. So just to recap, we got tax now, we got tax later, we got tax advantage. But the best way, in my humble opinion, in my 9+ years in this industry, is to become an entrepreneur. Talking about tax, eliminating taxes. You got two types of taxes, and I'm not a tax professional by any stretch of the imagination. I'm just sharing with you all what I know and what I've been exposed to from a tax standpoint. But please consult your tax professional to get further information, or you can even show them this podcast. They'll validate what it is that I'm saying, right? From my vantage point. to be in business for yourself, you got two tax brackets. You got the wage earning tax bracket. So that's you working a job. They take federal state tax out of your gross income and you left with the net, if you will, right? But then you got being a small business owner. That could be you own a barbershop or a beauty salon, or you do nails, or you're in landscaping, or you got an HVAC company, or you make t-shirts, or you sell jewelry, whatever you do. That could be you being a small business owner. Or you could be a 1099 independent contract. There's plenty of opportunities out here for you to do those types of things.
And it's funny you say that too, because I recently just became a 1099 contractor myself. So obviously I do some contracting work. And so for me, becoming my own boss in terms of having to now have contracting companies who would like to, hire me as a contractor for, a short-term contract, a long-term contract, they can go directly through my LLC now. And so I'm very proud about that, and definitely, learning what I've learned over the course of period of time about how many monetary benefits I get from the government. Being a 1099, contractor, I was like, man, I wish I had done this a long time ago. But again,
exactly,
we don't know what we don't know until it comes up that we didn't know it. And so, but I always say this too, especially in our Black community, especially from the financial sector, is that excuses or ignorance can no longer be an excuse. There's an abundance of information out here now. And so this platform more specifically is about dispersing that information to our Black community so that we can make it applicable to our own lives and provide it to other people who can do the same, because this is information that's going to affect us in a more positive light and help us in the long game. We want to be able to help get us to a place where we're changing the narrative about us in the Black community. No one's going to paint us with this broad brush anymore. We're going to basically have the power to do this ourselves and say, we're representatives of ourselves in the most positive light you can ever imagine. And because we've taken the information that we've gained over a course of period of time to apply this to our everyday life, now you can't say that we're this and we're that. No, we get to determine what we are now based on the information that we've actually gained.
We got to write our own history book.
Absolutely,
at the end
man.
of the day.
And everybody has a pen. Everybody has that pen to write it. Everybody has that pen, that pad, that time, and the opportunity to write their own chapter in their book and write their own life in that book, if you will, not just one.
Information is the new currency. And from a tax standpoint, you being in business, you got tax exemptions, you got tax write-offs, and you got tax deductions. And depending on what industry you in with your business, some have more than others. Me being in the financial industry, I think we have some of the most tax write-offs, exemptions, and deductions. But that means what? It's all about being able to recycle the money that you make. So the money that you don't pay in taxes should be the same amount of money, or at least close to it, that you should be putting in different investments to grow it. So when you get to your latter years, you got $5 million because you took the information and you took action on it, and you stay consistent with your action plan, even if things change, because you got a financial professional that you're talking to regularly. That's how the train continues to run. Now you're in retirement, and now you're getting $10,000 a month, whether you get out the bed or not, and it's tax-free because of the things that you do now proactively instead of being reactive, meaning you retire and now you're trying to figure it out. No, be proactive now. It doesn't matter if you're 22 watching this, if you're 35 watching this, or if you're 50 watching this. It's never too late to start. Obviously, if you're older, you may have less time to reach your goal, so it may take you investing a little bit more money. But if you're younger, and when I say younger, I mean like in the early second quarter of your working life, if you will, do it now. Because when you do it in small increments over a long period of time, you'll have more money for the here and now, instant gratification, as well as when you get ready to retire and live the rest of your life with your children, your grandchildren, your spouse, or whoever may be in your life, if it's applicable to you.
Absolutely, man. You know what? One thing I've learned too, and I'm still learning this, is that time is that's a currency that you don't want to waste. Absolutely, because you don't get that time back. And so, as soon as you can do it, the better. The sooner you can do it, the more you're going to have to benefit from in the long run. And so we have to be very much so conscientious about not just us, but for our kids, our future generations that's going to be here long after we're gone, right? These types of things have to be taken into strong consideration when it comes to building, sustaining, and even first and foremost, establishing generational wealth for a generation that we may ultimately not be able to be here to see. So
absolutely.
Again, man, I appreciate you for sharing this information. Definitely, just give us, give your live a shout out. So if anybody want to reach out to you on social media, how can they get in touch with you?
Absolutely. Well, I'm on, for the most part, the main social media sites, hence, Facebook and Instagram. Not really big on Twitter. I may get back into it at some point. But on Facebook, you can reach out to me at Johnny Johnson, and that's Johney, Johnson, Johnson. You can reach out to me at Instagram, Johnny Cash with a K, so Johney, K as in kite, A as in alpha, S as in Sam, H as in Henry, 06. And if you want to reach out to me directly via call or text, my phone number is 708-317-8800. Once again, 708-317-8800. Or you can reach out to me via email, and that'll be Johnny, Johney, period, Johnson, Johnson, at finfitlife.com. That's F as in Frank, I as in ice cream, N as in Nancy, F as in Frank, I as in ice cream, T as in Tom, L as in Larry, I as in ice cream, F as in Frank, E as in Edward.com.
All right.
So that's me.
Yeah, ladies and gentlemen, I will be providing this information into the description of the show, so that you can, obviously, if you have any frequently asked questions from a financial standpoint, you want to reach out to Johnny, you can definitely do that. Be sure to comment, like, share, subscribe, share this episode once it gets posted.
And one thing before you finish, I didn't mean to interject, but whenever I have meetings with my clients, I make sure that I'm providing the information that's valuable to you, but I also do it for free. So the same information I provide you, other people that are in my same, type of situation, they may charge you anywhere from $500 to $1,500 for the same type of information. So if you're looking for some valuable information from a man with integrity and high professionalism, and only is going to give you the information that I would want to receive if I were you, and you want to get that information for free, by all means, reach out to me. Let's schedule a time to have a conversation, and then we can take it from there. So I just wanted to share that as well.
Absolutely. And there you have it, folks. This is Johnny Johnson right here. This is a licensed financial professional right here who is here to disperse as much information as possible that we can use in our everyday lives in the Black community to help us gain some financial literacy and economic empowerment, right? So because we're lacking that too many times, too often in our community. And so getting ahead in life, playing the long game, and establishing generational wealth for ourselves and for our kids is the ultimate goal. Johnny, man, I really appreciate you for being on the show to talk about this, and definitely look forward to having you on the show again, because as we keep going through life and keep living every single day, until we get to a place where we're better off as a community in totality in these different areas that we speak about on this show, we're going to keep bringing these topics up to talk about them in more depth, and even reiterate some of the things that we already talked about. So I appreciate
Absolutely. I appreciate you as well, brother, and I look forward to joining you at another time.
Easy. Make sure you guys share, subscribe, like, comment to my YouTube channel, Spotify, Google Podcasts, Apple Podcasts, all the wonderful things. Let me know what you guys think about these episodes as I put them out, because this information is going to be vital to our everyday life. So again, thank you. Look forward to talking to you again, man.
Yes, sir, brother. Peace, love, and blessings.
Thank you. If you like what you've heard from this week's episode and would like to hear more from previous episodes, be sure to like, share, comment, and subscribe to my YouTube channel below. You can also find me on social media platforms at Speak to the Mic _podcast show on Instagram and Speak to the Mic podcast show on Facebook. Be sure to also like, share, and subscribe to my Spotify page at Speak to the Mic podcast show. As I put out more thought-provoking content, your opinion and thoughts are needed and appreciated. I thank you all in advance for your support and look forward to hearing from you soon.